business formation is key, right? Making sure that your business is registered through your state, right? Making sure you have a business checking account. So that's a hack for anyone that's in our same industry. If you go to NAICS, right, and you type in whatever code and you try to find credit repair, you will never find credit repair. We don't educate based off something that we were told online or something we saw online. We educate based off real life experiences. I got $250,000 from JP Morgan, right? I'm the best in my industry. Like, no one's going to outrace me. That's how I think, because every single day I'm devoting hours and hours into my business.
Hello, everyone, and welcome to the Lalwani Lounge. I'm your host, Lalwani, and today we have Darius from Brown Asset Group. He's been on this podcast before. We did speak a lot about personal credit. If you haven't watched that episode, definitely watch that one. Today, we're going to talk about business credit, how your business credit affects you, how your business credit affects your funding, and what are some of the steps that you can take to track and to make sure your business credit is lovely. So definitely watch this episode, enjoy it, and definitely reach out to Darius Brown for all your other credit-related questions. Hey Darius, how's it going? Welcome back to the show. It was lovely talking to you the last time, and I was looking forward to having this other conversation with you. So thank you for making some time for me for this next episode.
Thank you for having me, AJ.
Of course, Mr. Brown. What, the man with the plan?
There's the plan. Absolutely. Yes.
Love it. So last time we did talk a lot about personal credit and how to, clean it up and how to, be better at managing your credit. And you did say something about business credit. So now that I have cleaned up my personal credit and, I want to get into entrepreneurship. I want to, build a business, and I want to solve a problem, bring value to the people around me. How do I understand my business credit and go about from there?
For sure. Well, first and foremost, I want to thank you for having me on to educate the masses, educate our community. I strongly feel like this information is going to help a lot of people. So thank you again. So yes, now that we have the personal credit out the way, now for that entrepreneur that's looking to establish business credit, the first thing is understanding how your business is formatted, right? Business formation is key, right? Making sure that your business is registered through your state, right? Making sure you have a business checking account, right? Make sure you have set up your vendor accounts, which we call them net 30 accounts. We have net 30, net 55, net 60s. This works in a business owner's favor because, number one, it helps you establish business credit very fast. Number two, you're being invoiced. So let's just say Brown Assets Group, for example, needs office supplies. Well, we don't have to pay for it out of pocket right there. They'll invoice us, and we have up to 30 days, 55 days, or 60 days, depending on that vendor account. We have that amount of time to pay it back. So they'll send us the product. They'll send us the merchandise that we need to scale up. These are all benefits, right? While we're building up business credit. And then also setting up your NAV business profile. So NAV business is like your credit bureau account, right? This is how you're able to track what's being reported on your business profile. So yeah, those are the first steps.
And some of the things that I wanted to understand from that is, like you said, NAV account. What actually is a NAV account? What I've heard is the DUNS number, the Dun and Bradstreet number.
Yeah.
So what is different from what is the difference between NAV account and the DUNS number?
Great question. So your Duns and Brads number is a unique identification number that's associated with your business, right? It's almost like your EIN number or your tax ID number, right? And that allows the business credit bureaus to track your business profile, track your actual business. So that's very, very important when you are in the premature stages of building your business and formatting your business correctly, right? You want to establish your DUNS number, because as you're building business credit and you're using your net 30 or your net 55 accounts, right, they're reporting to Dun and Bradstreet. They're reporting. So with NAV is essentially the profile that you're going to be using to track your entire business portfolio. So it's going to show your personal credit score. It's going to show your business, right? Your business speaking score. It's going to show your Equifax score, your experience score, your Dun & Brad score, right? And then also it's going to show your monthly expenses. So your expenditures, where you're going, like as far as your revenue, right? And this also keeps track for the lenders to see, okay, AJ's business is headed in the right direction. And then the cool thing about the NAV business profile account is they'll send you alerts and they'll give you certain approval odds. Let's say Amex, right? Amex is like, man, this business is booming. Done just talking to NAV. They're talking to the other reporting agencies and they're like, man, give this guy a great approval odd for Amex for $250,000. You can see all of that in your NAV business account. So it's pretty cool. It's essentially like Experian for personal credit.
Okay.
Allows you to track it. Or I don't know if you ever heard of Lending Tree.
I've heard of Lending Tree.
It's similar to like Lending Tree. It allows you to be able to see your cash flow, your business scores, your personal score, and also the expenditures.
Okay, so it's like a cumulative for your personal and your business. Is that why I keep getting these mails from Amex saying, hey, you've been approved for another credit card, or, get this credit card or get that credit card for your business?
I mean, essentially it could be, depending on if it's a business Amex card. Now, if it's business Amex, yes. But with the NAV account, everything is going to be sent to you via email.
Okay.
Right, so it's paperless. So they're going to send you either email, they're going to say, hey, congratulations, your approval odds for this Amex business card, see your offers inside of your NAV account.
Okay.
Right? But that's the first thing, creating the NAV business profile, right? So once you've established your DUNS number, right? Okay, let's set up your NAV account, right? Once we set up your NAV account, let's go ahead and create your net 30 accounts, right? And let's use those net 30 accounts. So let's just say we have a net 30 account called Office Gardener, right? So for example, my wife and I, we're going to Alabama next week for this cultural event, right? And what we're doing, we want to have our booth, we're going to set up, but we're going to be having prizes. So we're giving away drones, we're giving away speakers, we're giving away sound bar systems, we're giving away these things, but we didn't have to come out of pocket, our own pocket. We used our net 30 accounts, right? And with those net 30 accounts, they give us up to 30 days to pay the invoice back. So they'll invoice us, send the product, and then in 30 days we pay it back. And rule of thumb, if you order something, don't wait the full 30 days to pay it back. Pay it back around the 15-day mark after you place the order, right? And what Office Gardener is going to do is they're going to report that payment history to the 3 business bureaus as good payment.
Okay.
Right? It's similar to building personal credit. Somebody, oh, wow, he has an Office Gardener net 30 account. Yes, he's making orders every single month for his business to scale his business for whatever he needs for his business, but he's paying it on time. And as long as you do that, you're building up substantial business credit, and it's a complete game changer.
Okay. So the way I usually handle for my business is I would order it from like Amazon or something, or Office Max, and I'll pay it on my credit card, my business credit card, and then pay that off in net 30 instead of having this Office Gardener account. So is there a difference between doing it net 30 vendors or net 30 credit card?
Either or is fine. We recommend having at least 5 net 30 accounts. Office Gardener is just one of them, right?
Okay.
That's one of the ones that we use. You have Uline, you have Granger, you have Quill, right? So depending on what industry you're in, like if you're in the construction industry, Uline and Granger, top notch. Home improvements, go through Uline, go through Granger, right? In your case, yes, if you have your credit card, right, and your credit card is tied to a particular net 30 account, it's still working in your favor because they're still reporting it to the major business bureaus.
Right. Okay. Why do I actually need to worry about a business credit score, or like understanding my business credit? Why do I need this NAV account itself?
Absolutely. So business credit is a complete game changer, not just for your business, but for your life in general, right? If you're looking to purchase a vehicle, it should go under your business name. It helps protect your personal credit, where it's not necessarily reflecting on your credit report. You get way better financing options opposed to putting it under your personal credit, right? And when I say financing options, because you have more cash flow coming through your business opposed to your personal, right? The lenders are not going to be as reluctant to give you the maximum amount of funding. The reason why building business credit is key. Number one, you can build business credit within the first 30 days.
Okay.
Like super fast. We've helped clients where they will start and then the first 20, 30 days, they already have established a business score. And oh man, we're on the right track. Right. So it goes up to 100, your score, right? So anywhere between 81 to about 90, you're in a good place. So once, and this is the importance of having your NAB account, because you're able to see this. You're gonna say, oh wow, like my business score is great. It's around a 90. Okay, cool. My expenses are substantial. My revenue is good, because this is what the lenders are looking at, right? And then also, okay, cool. Like, man, I just got approved for Amex $250,000. I'm going to use that I'm going to use that quick. Where, of course, personal credit plays a part, because they're going to revert back to your personal credit. They just want to make sure, okay, why is he wanting to use his business credit and post his personal? So they just want to make sure that your personal credit is okay. Doesn't have to be the greatest. You don't have to have an 800 credit score, but they just want to ensure that you're responsible. But to answer your question, the business credit is key, because yes, you get better financing options. You're able to save a lot more leveraging your business credit, believe it or not.
How's that?
Saving a lot more is because, let's say, for example, if I got $250,000 from JP Morgan, right? They give it to me. I know exactly what I'm going to do with that $250,000 to 10x that initial loan amount.
Okay.
Where I can pay it back within the first 3 to 6 months and put money in my pocket, where I never had to touch my own liquid.
Okay. And when you say like you could build it within the first 30 days, do I have to be in profit for it, or if I'm taking losses? Because like when I start a business, right, I'm doing a lot of setup costs essentially, right? So I'm bleeding in a lot of money. Maybe I bought some computers, maybe I bought some furniture, I bought, X, Y, and Z. Maybe I hired an assistant or some staff, and they take biweekly salaries. So I'm losing money initially,
Right.
While I'm setting it up. Even though if I have like the whole business plan set, I don't start making money according to my business plan in the first 6 months or so. Right? Till I go from red to green.
Mm-hmm.
Will I still be able to build credit in like the first 30 days, or do I have to go in the green first and then 30 days after?
Great question. So essentially, yes, establishing business credit first is key, right? And creating some type of revenue stream, because essentially the lenders want to identify, hey, can this person pay this initial loan back, right? So having some type of revenue stream is absolutely key. Now, it's all about relationships too. Like we tell our students, even in our mentorship program, like show your face inside of your bank, right? Credit unions are amazing. Go in there frequently. Like I make bank runs every single day. I'd rather go to the bank than go to the nightclub. That's just me. Like my wife will tell you, I go to the bank every day. I just go to say, hey, what's up? Right? They know my kids, they know my wife, they know me. Because if I need something, because I've established that good faith, I've established those profound relationships, like when I need something, they know, okay, Mr. Brown, he's the guy. Like we're willing to help him out. So relationships is key. The reason why I bring that up is because a lot of people, they get discouraged when they're like, I just started my business. I have good personal credit, but I don't have a lot of revenue coming in. That's totally fine. This is why it's important to establish those relationships.
Right.
Work your way up. I have this saying, you have to crawl before you walk. And so instead of asking for $10,000, like show them that you're responsible enough. Ask for $2,500, right? And do something that you know with that 2,500, I can at least 5x it, right? I can 5x that income, boom, and just continue to allow it to grow over time, allow your business to continue to head in a positive direction. And while you're doing that, go inside of another bank, establish some relationships in that bank, right? That's key. And a lot of people don't do that. But yeah, that's where I would say first start there.
Okay. Just a side note, when you were talking about, you going into the bank every day, there, like, especially in my culture, you would hear parents and grandparents going into the bank to update their passbook. I don't know if you know what a passbook is. Passbook. So it's a small booklet. You give it to the bank teller, and they will update your balance for that day. So they would not do any kind of transaction, but they would go in every day to get it updated. And like that passbook will go inside a printer, in a dot matrix printer, and like come out on the other side with 8-bit characters going, okay, your balance is still the same. So that just reminded me of how parents and grandparents used to go into the bank to update their passbook every single day without doing any transactions.
Listen, Gen Zs, millennials, take note. Follow them.
But sorry, coming back to the point, right? So now when we're establishing this business credit, we're establishing relationships. When it comes to business credit, do things like late payments and stuff like that affect your business credit like they do your personal credit?
Absolutely, 100%.
And they're also 35% or similar?
It's similar. So the parameters are similar. But yeah, you don't want to be late on anything. For example, if I have a net 30 and I'm late on it, they're going to report that late payment, and that could hurt your business credit score. Right. So it's important to ensure that, hey, if I'm going to purchase something in my business, that you're able to pay it back. Yeah. Payment history is the biggest factor.
Okay.
Yeah.
So you treat your business credit just like you would treat your personal credit and take care of it with the same amount of care.
Exactly. Now there's other factors that lenders look at when it comes to your business, building business credit, and one of them is, so payment history, of course, ensuring you're paying everything on time, but also business, like the industry that you're in. So like even within our industry, to a lot of the banks, it's considered a high risk industry.
Right.
So essentially, and I'm just giving you guys some real game right now, our company has to be registered, the NAICS code. Mm-hmm. We have to register ourselves as a consulting firm. Okay. Not a credit repair company. Right. Because of it being a high risk. Because if we register as a credit repair company, number one, a lot of the lenders, they're going to be like, we don't want to give them a loan. Mm-hmm. So that's a hack for anyone that's in our same industry. Number one, actually, let me take that back because I've been doing this for so long. If you go to NAICS, right, and you type in whatever code and you try to find credit repair, you will never find credit repair. It's going to be like financial education or consulting something, mm-hmm. but you'll never see credit repair. And that's a clear indication how high of a risk our industry is. Right. They don't really want any parts of us because of the risk. So depending on your industry, they look at that, the risk, the payment, and ensuring that your business is formatted correctly. So making sure that you are registered, and you haven't, your business hasn't dissolved. You ever heard of people, they'll start a business, right? They'll start it, and then 6 months later, the business is dissolved. Right. It's essentially, to the lenders, they're like, oh, did they go bankrupt? Why did they dissolve within 6 months? You don't want that. Like they're backtracking years of history. So if you look at Brown Assets Group was established in 2019. If you try to find us, you're going to see the same exact company since the inception since 2019. Right. So and the reason why I bring that up is because a lot of times people, they change industries, which is fine, but just use the same company name, right? But just change the NAICS code, right? Because it's too many. I guess it's contingent upon I guess it's contingent upon if you're in the same industry. And the reason I say that, let's say if like Brown Assets Group is the umbrella, right? Brown Assets Group is the umbrella. When you hear Brown Assets Group, if you don't know who I am, you wouldn't know that it's a credit company.
Right.
Think about that.
Right.
Like we can be anything,
Right.
right? We can be a real estate investors. We can do anything. And that's why we were very intentional of naming it Brown Assets Group.
Right.
Right? Because if I want to open up another or start another company, I could just put it under Brown Assets Group and have these different umbrellas. So when the lenders are looking, they're okay, he has multiple companies, but it's all under this one company,
Right.
which is Brown Assets Group. But that makes, yeah, it does. Okay, because the reason why I'm very analytical, but when we created this company, I knew that we were going to eventually get into real estate, do other things, but I did not want to ever say, okay, I got to start this business because to the lenders, they're all over the place.
Right.
They have no structure.
Right.
So yeah.
Okay. So
I know I can blah, so stop me if I ever, keep blabbing.
no, I won't stop you. This is why you're here. Like I want you to blab. So in terms of this setting up the business in NCIS, like I'm pretty sure if you change your code, you would have to change your insurances, your business license, and all of that go with the type of business you have, right?
Correct.
Right. And if you select finance, then you have to have like higher insurances because they have to be sure that you're not duping people in terms of finance, right?
Exactly.
Okay. So that is also something that they make sure that they're keeping track of. So if you're not keeping track, somebody else is going to tell you, hey, that's where you messed up.
That's where you messed up. Ways, if you go inside of a bank to get a loan, they're looking at all of these intricate things. Especially because even though we're credit repair, we're still considered finance. We're still in the financial industry, right? Correct. And because of it being such a high risk industry, we have to dot our I's and cross our T's. Like we have to do things in decency and order and make sure that we're in compliance, especially the credit repair industry. So like even with our students that are looking to start their own credit business, this is one of the reasons. Like, number one, our program's 12 weeks. And people are like, man, 12 weeks is a long time. Just setting up the systems and ensuring that our students have everything in line with building their business, right? We want to make sure, number one, guess who's in our backyard? AJ. True. One of the bureaus.
Really? Wow.
Guess who's in our backyard? Just take a guess.
Experience.
Let's have some fun. Equifax.
Equifax.
So if we don't have everything set up accordingly, right, for our credit repair business to ensure that we're building not a successful credit repair business, but a sustainable credit repair business, they're in our backyard. If we violate the Fair Credit Reporting Act, if we violate the FTC, which is the Federal Trade Commission, right, not only they will sue us, we'll go bankrupt, right, but that's a major liability. Right. So taking extreme precaution to ensure that, yes, your business has to be formatted correctly. Yes, we're going to build the business credit. That's key. But if your business is not formatted the right way, yeah, it's a recipe for disaster.
Okay. So question. One would be that I know you say it's a 12-week program. What if you market it as like 2.5 months? Like, because 2.5 is like a smaller number than 12.
Surprisingly, you're right. But surprisingly, it gives people peace of mind when we say 12 weeks.
Okay.
It was just crazy because we were reluctant. We were like, should we do like, how should we market it to let people know how long it will take to graduate the program?
Right.
Some of our students finish within 6 weeks.
Okay.
Within half of the time because they're going in there. And the cool thing about it's an online university. So we're able to track them as far as completing the modules step by step. We have weekly calls to ensure that they're headed in the right direction, setting up their, implementation systems, because we want them to have a sustainable business, right? Okay. And we want to ensure that they're studying like what we call consumer laws to truly go out there and help their clients reach their overall credit score goals and help them establish business credit. So when we tell them that it's 12 weeks, they know that they're truly getting their money's worth.
Okay.
Because it's a high ticket offer. It's a high ticket program.
Right.
Right. So we want to ensure that we're giving our best self as mentors to our mentees to ensure that they made the right investment.
Okay. So even so, say for example, I do the program or I talk to you for these 12 weeks, right? I'll go through your program, and do you follow up with these people after 12 weeks saying like, hey, this is a new law that came up, and I just wanted to let you know that, hey, this might affect what you've already learned from me based on this new change of law or something.
Great, man, dude. Great.
This guy is dope, man. I love it, dude. Man, see, great minds think alike. Yes, so that's one of the reasons why you have lifetime access to the online university. Okay, lifetime access. So we understand laws are constantly updating, changing, right? With the credit repair, slightly, not too much changes happen, but anything that does happen, whether it's pertaining to consumer laws, something that the bureaus have implemented or came out with, we put that right inside of the university. And then our students get an update and they go in and they say, okay, cool. And then we'll curate a video kind of breaking it down, give them some understanding on what the new updates are. So they're constantly getting those new updates.
Okay. Because I've seen a lot of people, try to recharge people like, oh, now there are new laws. If you want to learn this again, pay me some more money. So I like the fact that it's like, hey, it's lifetime. It's going to keep updating. And so you can stay updated. I'm learning, and I want to make sure that you're learning too in the process, right? Because I'm guessing new laws, you're learning them too.
For sure. Yeah, we have to practice what we preach, right? So if we're learning, we're students of the game, just like our students are. But most importantly, like our students, their family of brown assets group to light, right? So we look at it like, hey, you may be paying this high ticket offer for our mentorship program, but understand that number one, you are the best mentorship program on the market on this side of what we do, right? We've been doing this for 6 years almost, and we've trial and error, we've revamped, late nights, early mornings, just educating ourselves. And number one, I wanted to share this, like one thing about our mentorship program and our company, we don't educate based off something that we were told online or something we saw online. We educate based off real life experiences. Okay. Right? So like on your last episode, where we're talking about how did we pivot into the industry, we talked about how we got into our home. Right. Like that was the most gut wrenching feeling because we never want someone to experience what we experience. So it's really based off life experience with a mixture of truly educating ourselves before we put it out into the marketplace.
Right. Okay. So in terms of building business credit, right? Now, say for example, I'm in the 75-80 range, right? Which according to you is a good range to be in.
81.
81. So like just a little bit over 80. So between 80 and 90, let's say, right? So whatever that is. Now, how does this help me in my business? So like I have never taken out a business loan. So I'm also learning this whole process. I usually take a loan against my invoices. So if I invoice a client, I will just take a loan against it to get that money early and pay it off within a month as soon as I get my payment from my plan, right? So they have me on their net 30.
Okay.
And I would invoice them for my services, and they would pay me within 30 days. And I'll take on the other side, I'll take a 30-day loan against my invoice, but that's the limit I keep too, right? This one invoice because I do not want to use anything else as collateral except an asset.
God.
Which I know is gonna, like I know this is gonna be realized, and I can pay off this loan. So I've never dipped into my own equity yet.
When you say you borrow against the invoice, who are you're borrowing it from your client?
No, I'm borrowing it from, so I use QuickBooks for managing my business, and QuickBooks has a couple of lenders that it works with. So I literally go through that, or Amex also does business funding.
Business funding.
So I show them a copy of my invoice and which client I've send them to, and what's the payment terms on it. And then against that, they will give me that same amount as a business loan
Got it. So
for 30 days.
Gotcha.
So essentially it's like, as soon as I get my payment,
You pay that. Back.
I pay them back.
Got it.
So they know that I have money coming.
Yeah.
And I show them a track record of, hey, for the last 6 months, this client has always paid me on time.
Got it.
There are also some companies that I know that would directly have this, they will do a contract with my client directly in such a way that they will take 2% or 1% off the top. And as soon as I generate the invoice, I send them a copy and they give me money immediately within 12 hours, and only 2% less.
Right.
And I don't have to worry about, they will follow up with my client, take money from them. And I basically, as soon as I generate an invoice, I have money in my pocket. I don't have to wait 30 days, so I can invest this money into either paying out salaries or, hiring some more people or, making some more business decisions.
Sam, that's a game changer right there. Man, I learned something new. I learned something. Man, dude, give me a power. Right, but I learned something new. I mean, essentially, as long as it's helping you build your business credit, right? Which I'm assuming that it does, right? Like, have you? Oh, yeah, don't know. But you have your DUNS number.
Yes.
You have. All right. Do you have a NAB account?
No, I don't.
Okay, so that's the first thing that we have to do, right? Right. Establish a NAB business account, right? Because once you go in and you create it, right? You have your NAB account, which also reports as a positive. It's like a trade line. Okay, once you create it and you go on the NAB Prime membership, it's $60 a month. So you're just paying a membership, like you pay Netflix or something. As long as you're paying the membership reoccurring every month, they're reporting it as a positive trade line on your business account.
Okay.
Then they have what they call a NAB Prime card. So there's multiple business trade lines within one platform.
Okay.
Right. So you have your NAB Prime, you have the actual NAB account, right? You have your NAB Prime card, and then you have multiple, I'm talking about hundreds and hundreds and hundreds of lenders that you're leveraging all through the NAB account. So anytime that you're taking out a loan, it's reporting back to the 3 major business reporting agencies: Dun & Brad, Experian, Equifax. So that's the first thing we need to ensure that, hey, we need to identify what's AJ's scores, right? Has stuff been reporting over these last years or however long you've been in business? And once we've identified that, dude, maximum funding, here we come. Yeah.
Okay.
Yeah.
Oh, that
You got it. The strategy that you've used, dude, that's blowing. I'm still trying to register that. That's a game changer, man. You gotta, when we finish it, you gotta tell me how you got that play, man.
Yeah, I can tell you right now. Essentially,
Yeah, tell me.
So what I do is, like, I use QuickBooks as my account management software.
Okay.
I also run payroll through it. I do everything through QuickBooks.
Yeah, I do too, by the way. That's where I'm like, what the hell? How did I not know about this?
So when you generate invoices, you can generate them through QuickBooks, and QuickBooks also has a QuickBooks lending. So it sees the track record of it already has access to your accounts, right? So it sees that invoice was generated this day. There's a journal entry of the payment being made on this day. The difference is maybe 30 days, maybe 35 days, because not every vendor is on time. But there is consistent payment. So after 5 consistent payments, they know that, oh, this person's already going to pay, maybe late, maybe on time, but I'm going to get my money back.
Okay.
So they will charge you an interest for the additional days, maybe say 10% for the next 15 days or something, 10% APR. So that's not too much money.
Right.
But you still have all that money as soon as you generate the invoice. You generate the invoice, you send it, then QuickBooks sees that, and you can, against that, get a loan through an online portal. You don't even need to talk to another human being. Once you set it up, you're all set. And you just basically get that, and then you already have business insurances. So if they don't pay on time, you can use a business insurance to cover you up for that interest that you don't want to pay. I mean, if it's a small amount, you don't want to involve the insurance in it, because then your rates will go up, because they also want to make money.
Right.
But if it's a huge amount, like if you leveraged against 10, 20 invoices, and now you're like, oh shit, now I'm $100,000 that I have to pay back,
Right.
and they are 5 days late, collectively maybe. So then my interest goes high. Then I can use my insurance to pay that off, and then within the next 5 days, you have this 100,000 coming in, or maybe 80,000 coming in, because 20% profit, for example. and then you pay all of this back, and they're fine with it. And then the more you pay, the more they reduce your APRs.
Oh, okay. So
So they will adjust your APR based on how many times you pay.
So typically, what's the starting APR rate?
So I got an APR of 12, and I started 3 years into my business.
Okay.
So there was already a history. There was already like, I don't need the money, but I needed some money after the COVID hit. And then there were a lot of layoffs.
But so you weren't taking advantage of the PPP or
I did not take a single dime.
smart man.
Right? Good. So for me, I had to, I was in a position where I saw that I was losing a lot of money, but I was still making money. All right. I lost a lot of projects. I still was making money, but I realized that there are so many companies that did not plan for all of this. My dad always taught me to plan for emergencies, so I did. A lot of them did not do it, and I don't want to use up that money on me. I was like, maybe other companies can use it, people that actually need it. So I did not take that loan. But then I realized like Shake Shack took $2.5 million for stuff they didn't even need, right? They abused the system. I did not want to do it, right? And that's why our economy is still struggling, because there are people that will always take advantage of things like these. But I don't want to be that person. I've always leveraged against things that I know I can pay off.
Right.
So that's how I came across this, which works perfectly for me.
So our billing system, we don't invoice our clients through QuickBooks. So we use QuickBooks, of course, for like our bookkeeping, payroll, right? But we invoice through a platform called ChargeBee,
Okay.
right? So ChargeBee is integrated inside of our QuickBooks account. Makes sense?
Yes.
So how does that work? Like we're not using the invoice inside of QuickBooks to send to our client. Like how does that work? Are we still able to leverage this formula?
Okay, so then question, are you able to match that invoice to a payment in your bank account?
Yes.
Like, does it come up like as a transaction, all you have to do is hit match?
Yes.
Okay, perfect. Then QuickBooks already has a track record of this, so you're fine.
Yeah, they have a track record. We just met with our CFA today, so we were allocating and doing our reconciling for 2023. So, which guys, if you're a bookkeeper, God bless you. I don't know how you do it. It's the most tedious thing because I tried to do it. I was trying to save some money by doing it myself through QuickBooks. It took me 3 days to finish one page, like trying to allocate each transaction and reconcile expenses for 2023. Took me 3 days for one page, dude. Like my wife could tell you, AJ, my head was about to explode. I was like, dude, these bookkeepers, man, like you guys, I think they're underappreciated for sure. So it taught me a lot. It taught me ensuring that like keep up with your books throughout the calendar year, right? And just ensuring that, hey, look, as long as you do that. But now that I know about this play, oh yeah, I'm definitely going to implement that for sure.
Yeah, so I was going to suggest what I do is I reconcile my books every month. So as soon as the statement's generated, I actually have a calendar entry for every month on my calendar saying reconcile books today. So I do my credit cards and I do my bank statements on the same day. Just have these documents because in a month it's easier to, it's a smaller piece of information that you can reconcile, right? A very good way in QuickBooks is you can define rules. So you can set like, if I get it from Amazon, then just automatically do this, right? There's also a way where if you have a receipt, say for example, you've gone out for dinner, right? And you take a picture, you can actually email it to QuickBooks. There's an email ID you can generate in your expenses tab. If you send your receipt, it will automatically add it to a transaction that it recognizes for the same amount from the same credit card. So it automatically attaches that to that transaction. So you have a receipt attached to it.
Yeah. Okay.
All right. And you can also set it to like, if I send you a receipt, with an amount, create a journal entry for it. So like as soon as it hits your credit card, you already have a transaction that can match.
I'll have to talk to you about, because that's the thing, like I'm still learning. So we recently set up the bookkeeping membership where of course, like that's how I know about the rule concept, because basically a bookkeeper we'll schedule a call, bookkeeper call us. They'll walk us through it, but they have us still do it, right?
Right.
But what I found out about Intuit and the bookkeepers, and this is not to throw anyone under the bus, but each bookkeeper, those 3 days, each bookkeeper was giving me different information. It was like someone, and I think that's what made my head go say, okay, I'm about to just hire someone to reconcile these books. Cause like the last bookkeeper, he was cool, real cool guy. I forgot I think his name was Eric, but Eric or Michael or something, based out of California. And he was like, dude, like literally, and it made me feel better. It gave us a peace of mind for our company. He was like, dude, I've seen worse books, because this is one of the reasons why it's important to have a solid CPA, because we just fired our CPA and we hired another one. Okay. Which he's super, super dope. Because he filed an extension 2023. We just filed for 2023 last week.
Wow.
Yeah. And the deadline is October, by the way.
Right.
So and it was like, wait a minute. So I feel like if you're a business owner, right, like when you have a CPA, make sure they know what they're talking about. Number one. Number two, ensuring, like you said, like reconcile every month. Right. That's because for me, like, I'm like, if it's taking away from my business, then why am I doing it? I'd rather hire someone that's an expertise in that respective field, have them do it while I continue to focus on growing my business. Because those 3 days, think about it. So some 3 days is not a long time, but for me, like, I lost a lot of money in those 3 days. Right. So
the way I think of it is, whatever I have to delegate, I want to learn it first, because I want to know what it is it that they're doing. And if at any point they were to walk away, I can still get my work done without having to rely on anybody. Okay. I file my taxes every single year in February. That's how good I keep my books, because I know how to keep my books, because I learned it while I was paying people money to do it for me.
Got it.
I was like, why is this like this? Why is this like that? I'm that kid that still asks why. Right? So I get to a point now that even if I don't have a CPA, my profit and loss statement is going to look pristine, because I learned how to do it. Now I just delegate it. And all I have to do is maybe like 3 months or 6 months, I have to spend 30 minutes instead of 3 days to basically just review. Okay, looks good. Cool. Everything's fine. But what I like to think of it as, like, that would be your initial investment of you spending your 3 days to learn, where you're losing money, right? Because you're not making money on the other side, because you're still learning. But that's an investment in yourself. And so that moving forward, you don't have to worry about that. Moving forward, that 3 days becomes 3 hours.
yeah, you're right. And it's funny that you mentioned that, because I was explaining to my wife, even though it was a headache, I did learn a lot. Right. And you're right. Like, as a business owner, you want to have some type of competence in those areas that you typically will hire somebody else, but you at least want to know, because it's your business at the end of the day.
Right.
You want to make sure that, hey, you guys, I hired you for this, but I want to make sure you're doing it the right way. I don't want IRS to be knocking down my door saying, hey. So that's the reason why it's important, entrepreneurs, business owners, like my man AJ said, stay on top of your books.
Don't be like me.
Perfect. So just to close this entire loop, in terms of business credit, is there one piece of advice that you can give to new entrepreneurs? Like, I know, like, the seasoned ones have spent too much time learning, growing, all of that. But as we spoke in the last episode, there are a lot of new entrepreneurs that are coming up. There, this, whole remote work and COVID and all of these things has allowed people to take a lot of their businesses digital, a lot of their talents to come out, and they're all getting into this entrepreneurship. What is one advice you would give them in how to handle their business credit, apart from coming to Brown Assets Group? Like, what is it that, like, the most basic advice that you could give them?
First things first, make sure you subscribe to AJ's channel to watch this full episode from start to finish. That would be the first tip. And I mean that. And then share it with 5 people, by the way. Share it with 5 people. And then secondly, just make sure that you register your business. Make sure that you follow the parameters, right? If a lot of people, they go to social media, but a lot of the information on social media is fabricated.
Right.
How do I know this? Because I'm in the industry. And then I'm around certain people where it sounds good online, but if you put them in a classroom or if you put them in front of an audience with real live data, they freeze like a deer in the headlight. They don't know what the heck they're talking about because all they did was hear it from somebody else, and they're just regurgitating the information that they heard, but they didn't do the analysis. They didn't analyze to ensure that the information was indeed accurate. Make sense? So you want to make sure that you're getting your information from a reliable source, someone that knows what they're talking about, an expert in their respective field, right? And then once you do that, you just want to execute on the information. The information is there. Like this, I think, how long have we shot this episode? How long?
Maybe like close to an hour.
Like an hour, guys. Like there's this information, if you execute on it, I guarantee you in 6 months, you'll be contacting this man and saying, man, you're heaven sent, because it works. It works.
So what I gather from the last episode and this episode is, as long as you create the accounts that you mentioned,
Yes.
you track your credit,
Yes.
constantly, that there is a higher probability of you being in the green, always being ahead of the game, than by not tracking it and just letting it do what it's doing, right?
Yeah. And then get a mentor. Like, you know what I'm saying? Get someone that's been around, the block and is very
At Brown Assets Group.
Yeah, like, and even if it's not Brown Assets Group, like it's someone that because I may not be for everyone, and that's okay. And everyone is not for me, right? So get someone that you can relate to, get someone that knows their shit, get someone that has your best interest at heart and that's willing to give you the blueprint, right? It's okay to copycat. Just make sure you copy the right cat.
Right.
Is what my mentor told me. All right. So duplicate the roadmap, duplicate the blueprint, execute on it, and be intentional with educating yourself every single day on your business. Be the best that you can be. Like for me, I'm the best in my industry. Like no one's going to outrace me. That's how I think, because every single day I'm devoting hours and hours into my business, hours into my craft. So if you ask me a question, and if I don't know the answer, I'm gonna say I don't know, because I take pride in and I'm very intentional as far as not putting bullshit out into the marketplace that can affect someone's life, right? So if I don't know, I'm gonna simply say I don't know. But I guarantee you one thing, I'm gonna go back to the office and I'm gonna educate myself. And then I'm gonna ask questions to people that I know the answer. And then you ask me again, then I'm gonna say, okay, let's talk about it.
All right, makes sense. All right, thank you so much. On that note, we can definitely land this plane. Thank you so much for being part of the show, and it's always lovely to have you on the show. There's so much great information that we share with each other, and I'm pretty sure a lot of people listening will definitely gain something out of this. Good luck with your asset group, and hopefully you just keep getting better.
Thank you. Make sure you guys subscribe to my man's channel right now. Subscribe, like, comment, man. This is what it's all about, pushing the envelope forward. Thank you for having me.
Thank you so much, man.
Yes.